I'm John Burges. I'm the President and CEO of Northern Freegold. Northern Freegold trades on the TSXV venture, ticker's NFR. We're a gold exploration development company based in the Yukon. The property is the Freegold Mountain Project. It's located 200 kilometers north of the capital of the Yukon, which is Whitehorse. The property itself is 100% owned by Northern Freegold, and it's right now got about 1.3 million of indicated gold resources and another over 2 million ounces of inferred. So across all categories, we've basically got 3 million ounces. We've also got copper, molybdenum, and some silver. The property is road accessible from the capital, which is key because we can then access all of our equipment and rigs by road. And we're within 30 kilometers of electricity grid, which is one of the challenges of the Yukon. You know, it's a northern territory, so having access to road and power is a key advantage for us. The Yukon itself is obviously fabled for its mineral resources going back 100 plus years for the Klondike gold rush. And the Fraser Institute actually very recently just ranked it number 8 in the world in terms of mining jurisdictions. So it's got wonderful resource opportunities, good public policy, and for us at least we've got very good access to the key instruments you need to bring a development project into production, which is power and roads. I think there are few opportunities to invest in development companies in low-risk jurisdictions like the Yukon, part of northwest Canada, where you're getting 3 million ounces of gold. In essence, we have that right now. We've also got a lot of blue sky upside because we have a series of mineralized zones that we have yet to fully drill out, and we think there's some good opportunities to develop further deposits. We have a smaller vein gold system place called Tinta, which is on the property, for example, which has 70,000 ounces of gold, and it's had very limited drilling. So there's numerous mineralized zones on the property. We have a 10-kilometer geophysical anomaly, and we've probably drilled 2% of that right now. Well, in terms of catalysts, we've just in the last 10 days published our first preliminary economic assessment on the property. It was actually on the 2 deposits, Revenue and Nucleus. We generated a projected net present value of $615 million with a 23.5% pre-tax IRR, and we're trading at about 10 million market cap right now. So we're trading at about 2% of that implied base case net present value. We're also trading at about $3 a gold resource. So from a valuation perspective, you know, there's a lot of ounces in the ground. There's a lot of projected economics with the existing PEA. And I think for us, the catalyst is going to be to grow the resources further over time. And specifically this year, we're going to be targeting some of these mineralized zones that have got some higher grade gold that we haven't yet drilled out. And we're looking to find another discovery there. Well, I think there's clearly going to be a thinning of public markets, particularly in the gold space. And I think, in essence, what investors need to be looking for, based on their risk appetite, my assumption is you're going to have a balanced portfolio with a mix of cash flow producers. But to the extent you're going down to the junior exploration companies, you should really be looking at companies with assets. So that means, you know, 43-101 resources of size. You need to be thinking about jurisdictional risks. I think that's a key issue. We're seeing so many assets being confiscated overseas, and I think, you know, you also need to be thinking about the ability to scale up. We have, in my view, all of those.